Okay, we are live. Good morning, everyone. Today is Friday, the 22nd of November, and welcome to another episode of the Crypto Hour. Now, as you may have noticed, a lot going on in crypto just now. So first of all, we start unpicking it and see where all this extra volume is coming from. And then you'll see what what the expectations are for the near future, and as usual, without getting too excited, let's zoom out and see what this really means. Apart from making money, which I know that a lot of people is the first reason they get into crypto. But let's see what it really means for the future, this new technology, because this is what really motivates me and what moves me to keep going forward and doing this. Just a second, by the way, are we live? Just let me check one thing. Okay. Yeah, no, we're
Okay,
fine.
we are
Okay. It's everything's fine. All right, let's start sharing the screen. Okay, can you all see this? Can you see my screen?
Yes, we can.
Perfect. Okay. So first of all, let's have a look. Let's start having a very, very quick look at the economic calendar. Let's say was today. Today is the 22nd of November. As you can see, this week it wasn't really a heavy week in terms of news announcements. So nothing major. No main news from the kind of like unemployment claims. This is the weekly announcements of jobs in the job market in the UK. Sorry, in the US. Today as well, nothing major. Some manufacturing surveys and retail sales for Canada. Going to next week. We start having again the rate start of the rates being announced. So there will be official cash rate from New Zealand with expectations of half point drop. And pretty much nothing much for the rest of the week. We have the monetary minutes being published for the US that can give us some indication of where they're heading in terms of setting rates and the pace of it, and then the GDP figures for Canada. So again, not a heavy week in terms of news announcements. Generally, as we move to the end of the year, it's the pace of changes does slow down, and December is a time where a lot of the players pretty much like stay out of the market. Busy doing doing parties if they are kind of for institutional players. They are going to each other's party pretty much like a big jolly all month. And for kind of the house traders, they a lot of people take time off because there is very little movement. But as crypto people, then we are a little bit more interested because things are starting moving. So let's have a look at. So this is a day, 15 minutes. So as you can see here, this is a 15-minute chart. Okay, so Bitcoin is inching closer to the $100,000 mark. So the high that was done a little bit more than an hour ago is 99,422. Now let's put it into perspective. So look on the daily chart instead. As you can see, things have accelerated quite quickly. In November that we gone from 67 to almost 100,000. So let's see, because I want to compare this with the, with the past. So this blue line was the previous, I would consider kind of like the start of the bull market, really. Started of these really steep increases in price. But what also we want to go and have a look at is where is the previous all-time high, which was a 69,000, and we are now already moved quite a way away from on the previous all-time high, so a maximum more like 43% in Bitcoin terms. Now, when you so this is it seems like a lot, okay, but all of this, pretty much 100% of this move is dollar inflation. Okay, so this is like, I know it's quite shocking, but since November 2021 to now, this is how much your your dollars in your portfolio, in your wallet, whatever, have basically declined in purchasing power. Okay, it's over 40%. So if your investments, if you're a dollar, most of your assets are in dollars. If in the last 3 years your holdings have not gone up by 43%, you basically have lost money. Now, how can we tell that? If we go and have a look at instead of looking at this chart of Bitcoin priced in dollars, let's have a look at the chart of Bitcoin priced in gold. Okay, so this is so when you get this chart, it looks like this, because this is the price of gold in Bitcoin. So if you want to see the opposite, you need to invert it, and so you go to the here to the settings, and you go into invert scale. So that shows you the price of Bitcoin in gold. So where are we now? So this shows a completely different picture, because we are now pretty much we're standing at the all-time high, but no further than that. So we haven't broken through the new high in terms of Bitcoin priced in gold. So if we go back, you see, so this is the previous, you can see the previous bull market. So this is the 2017 to 2018, when we started really having tokens apart from Bitcoin and a couple of others. Once we start having Ethereum and all the Ethereum tokens come onto the market. So this was the big high that we had in 2018. And for most of this year, so for 2022, 2023, we're even below the 2017 high. And this one instead was reached the previous bull market. The high was reached in 2021. Okay, and it wasn't that dramatic as the dollar increase would show. It would just sorry, the other way around. It was in gold terms. Why is it showing me? Come on, measure, please. Oh yeah, because I'm showing an inverted chart. Sorry, I was wondering why I was getting a minus instead of a plus. So we can do it this way. So it was a 145% increase in gold terms, from the previous high. Okay, now this is, we'll have a look in a second, but this pattern here in 2021, which is the same in the cash, the Bitcoin price in gold, is completely different from what happened before. So you can see that the previous bull markets, they had all like kind of a fast growth and a fast a fast decline as well. This didn't happen in 2021, because by then we had the futures market. Okay, so where the traders could accumulate basically short positions without owning any Bitcoin. Before, what happened is that at every peak is that people kept buying Bitcoin until they thought that the price was too high and they didn't buy anymore. Okay, but they weren't big sellers on Bitcoin because a lot of people bought for the long term, and so a lot of Bitcoins were stashed away. In this market it was completely different, so it's a completely different pattern. Now, this pattern is unlikely to repeat this time for the simple reason that we now have. So before we just had Bitcoin, so people to trade Bitcoin had to buy and sell Bitcoin, full stop. Then the futures came onto the market. So now we could have Bitcoin exposure without physically owning Bitcoin. Okay. Now what's happening in this market here is that we now are ETFs. So ETFs are taking over from futures. So there is a lot more, there are a lot more traded, there are a lot more asset under management in the spot ETFs than there are in the futures ETFs. So basically now spot price is taking precedence once again. So most people are trading spot, they are trading futures or options. So again, the probably, and so there's no certainty in that, but probably what we are going to see is similar patterns that we saw in the previous bull markets. Like you can see here, 2018, this kind of like inverted V pattern, so fast growth and fast decline. That something like this that we saw in 2021. Now, so this is a lot, as usual. I do kind of like a bit of long-winded explanation, but what I wanted to tell you is that even if there's all this excitement, Bitcoin reaching almost 100,000, etc., we still haven't started a bull market. It hasn't even started. Okay, and this is, I know that is maybe a little bit shocking, but it hasn't even started. So in terms of gold, from the low to the high, we have, obviously there has been quite a considerable increase. But as you can see, gone from 11 to 27, so one and a half, so 150% of increase. But there is still a long way to go into this the whole move that Bitcoin is going to go. So I said to you last time, kind of like this was the kind of like expectations to reach, depending on where you count this from. But we were discussing that probably between 95,000 and 100,000 would be the current move before we get a pause. And the thing is that as well, the 100,000 is like psychological important level. So they're probably going to be, profit taking place at that level, and before we actually then initiate the next, the next leg of the move. But if we compare that now to, we'll have a look also at the, this is the total market cap. First of all, let's have a look at, before we look at this, let's have a look at the total market cap, because we are now in this one as well, we are reaching new highs. So at the moment is like the 3.27 trillion we touched, and it was just about 3 trillion at the high of last time. So we moved like 10% above, 10% above the all-time high that we've had in 2021. But if we really want to have a look again, what's the total market cap in gold, we can do the same thing that we did before. So invert the scale. So as you can see, it's the same. So it's pretty much the same as the Bitcoin chart that we were looking at, because at the moment Bitcoin represents the majority of the crypto market. So over 60% of the total market cap is Bitcoin. So as you can see, we touched again all-time high for this, but we haven't moved beyond it yet. So we haven't really done any significant increase in the price of crypto in general, priced in gold. So all the increase that we see now, it's down to simply the devaluation of the US dollar rather than a increase in the perception, so in the value of crypto across the board. So let's go back to now total 3, which is the market cap. Sorry, let me just move that back. So this is the total market cap now, excluding Bitcoin and Ethereum. So we are now, over the past week, so last week we were hovering around the 2024 high. Now we move beyond that. So we're now making new highs for 2024. But when we go back, you see the difference between this chart and the one for Bitcoin. So Bitcoin is already up here so has moved already about 30% plus above the 2021 highs, where the altcoins are still lagging behind. So at the moment we are, they will need to increase by an extra 30%, to get even to the all-time high, okay, which was again in November 2021. So there's still a way to go. And again, I think then we haven't even started the kind of the bull market. There has been a lot of movement literally in the past 24 hours in prices. If you can see here, I can see this couple of candles, they're really grown up because, and let's have a look at what are the news relating to this. The biggest news is this one. Okay, Gary Gensler to step down as chairman of the SEC, and he has been, a big issue, a big thorn into the sides of all crypto investors, crypto projects, and has really kept crypto down, really almost like single-handedly for 4 years. Now, obviously, Donald Trump had already announced that he was going to get rid of Gary Gensler, so he's basically anticipated this move, and he'll step down on January 20th, which is when President Trump gets inaugurated. So it's really no surprise to hear that. So he basically stepped out before he got pushed, but it is, again, news has been taken with wide excitement across the crypto industry, as you can imagine. And combined with this, where are we? Sorry. So together with this, we should have a look at this news, okay? And this is something that has been in the courts for quite a while now, for over a year. Okay, this is basically a definition of the word dealer. There are far-reaching consequences. So the way that the SEC looked to apply this definition to crypto, it basically wanted to include all crypto players in this definition of dealers, okay, which is the definition that was intended to separate, the broker dealers from, the normal investors. And that, by applying this really wide-reaching definition of dealer, it meant that, most of the crypto projects, most of crypto miners, and also crypto traders would have been classified by the SEC as dealers, with a mountain of paperwork about not just themselves, but also about the people that use their services. Now, can you imagine, in the case of DeFi, there are lots of decentralized applications like Uniswap, for example, and they wouldn't have the necessary information to be able to provide all this information to the SEC. So in a way, applying that definition would have meant that pretty much the crypto industry in the US would have been reduced to a real trickle. Now, what happens? This is like, it's in Texas, in the district court for the Northern District of Texas, it ruled yesterday that the SEC exceeded its statutory authority. So basically, what the dealer rule was an attempt to unlawfully expand the SEC authority and stifle crypto innovation. Well, this is a little bit of, but basically what they were trying to do, we're trying to create legislation by regulation. Okay, and now legislation, it is not the purpose of the SEC. They are executors of the legislation, which whose power resides with the legislative structure in either in the country or in the single states. So it's really was seen as a case of overreach from the SEC. So what happened is that as soon as the SEC introduced this dealers rule, then there was a blockchain association that sued the SEC to get clarity about this, because at the end of the day, it's not about not wanting any overreach, but wanting to have clear lines of clear boundaries of what the statutory authority lies and what can and cannot be done by genuine crypto projects. So these two things seen together have caused like a boom in prices of a lot of cryptos, and in particular XRP, which are still locked in they're locked in a case with the SEC, and it seemed that with the departure of Gary Gensler, probably they think that maybe the case might be dropped, and that again brings new excitement to the to the world of crypto. All these funds, so we've gone back to 2021, but where are the funds come from so far? And most of the funds are still coming. So we haven't got the crypto industry really getting excited and bringing new money. All the new money so far that's coming in has been pretty much by the ETFs. And then obviously the ETFs bring new money into crypto, and then that starts spilling out into other projects as well. But if we have a look at the flows, we are now sorry, what do we say in the US dollars? We have now reached 30 billion of new funds coming into crypto from the inception of the ETFs. And this is how these are formed. You can see the Grayscale in red, BlackRock, Fidelity, and all the smaller funds. But these have been the most successful launch ever by a country mile in terms of ETFs. And if we see, I've had a spreadsheet, I'm also taking a screenshot, but I might have it here. Wait a second. Oh, there we are. So just to put it into perspective, now at the latest value, the Bitcoin ETFs put together have now reached a value over $100 billion. And this is compared with the gold ETF that was launched in 2004. So it's been in place for 20 years. That has only got about 20% more, 121 billion. So you can see now, that the Bitcoin is quickly replacing the function of gold as a favorite method of holding value, because it's very, very similar in the way, because neither Bitcoin nor gold pay any yield. So it's simply appreciation, so they compete against each other for a very similar function. So many describe Bitcoin as a programmable digital and programmable gold, and in many cases it is true. So it's got a similar function, especially it's more pure than gold in the sense that the maximum amount of Bitcoin that will ever be produced is defined by code. So we know already what's the maximum amount of Bitcoin that there'll ever be in the market. Where with gold, it really depends on what we can dig out of Earth, or what about if we manage to mine a comet or an asteroid that's got vast quantity of gold. What difference would it make to the price of gold? So there are lots of more uncertainties in gold than there are in Bitcoin. And after the last what's it called, the Bitcoin halving, now at the moment, right now the inflation in Bitcoin, because Bitcoin has gone inflation at the moment, because not all Bitcoins are being created yet. So every 10 minutes there are new Bitcoins that enter the market with the process of mining. And with gold, there is new gold that comes into the market because it's mined out of the ground and introduced in the markets. Now, the inflation rate of Bitcoin is now inferior to the one of gold. So there is, there is more inflation in gold than there is in Bitcoin. So this is in absolute terms. So there are more than one things that point to, Bitcoin becoming a more valuable, more desirable asset to hold compared to gold. And I'm talking about, I'm not really looking now at price fluctuation, but I'm looking at in the long term. So if you have to choose, shall I keep gold or shall I keep Bitcoin? And you have like a 20-year outlook on things at the moment, Bitcoin, you would say, is becoming more and more preferred over gold as a store of value. A few more things to share with you. We've gone through this. This is another big thing, although it's something that wouldn't have passed many people's radars, but it is a big news. So this is the Commodity and Futures Trading Commission. Okay, so it's now will allow. I mean, this is in theory. He hasn't still passed through all the stages. Okay, but it will soon. Probably I'll have to with the disclaimer. Will allow having tokenized assets as collateral in derivatives trading. I know it seems to me, what is derivatives trading? What are tokenized assets? What is collateral? So we're talking about big players, okay? So like big banks, of hedge funds, etc., that trade derivatives. Derivatives are, anything that derives from another asset. So it would be like futures, it would be like options, all these kind of like and more complex instruments. Now, to trade those, you need to have collateral. Okay, and what was accepted as collateral is very well defined. Okay, now the fact that we can have tokenized assets as collateral, it means that you can have a lot more inventive processes and things that you can hold. So instead of just having cash or bonds, now you could have a tokenized assets like BlackRock has got one that's called BUIDL, for example, instead of build, the last two letters inverted. So that can be used in your collateral. And so if you start building this collateral in a way that produces decent yield as well, you can have something, because you need to keep those assets in a place doing nothing really. Obviously, you can trade them because they're your collateral. So if you can have your collateral that's generating yield as well, that you can imagine how desirable that is for companies, for players that need to have several $1 billion in collateral sitting there doing nothing, where instead they could have several $1 billion of something that's producing a yield, while at the same time they're using the value of that to trade against. It's absolutely massive, because we're talking about $3 trillion at the moment of value of crypto market. We're talking about over 50 trillion in bond trading itself. So you can see that what we need to do, if even you get a little percentage of bonds, for example, being collateralized and used as and for this use. So if for that you may get maybe 5%, 10%, what difference would it make? Would it make to the crypto market? That would pretty much like double the amount of the value is then within the total crypto value. So it's absolutely massive. Just this in itself, obviously, is what at the moment crypto prices are still down to hype more than real world use. This is one of the real world uses that can cause a surge, like something that you've never seen before. So we've seen the gold and so we've seen that already. So this is talking about what was talked about ever since the results of the election started coming through, and before doing the electoral campaign. So Trump's campaign was talking about setting up a strategic Bitcoin reserve and creating a crypto advisory council, which is very welcome in any case. And in one sense, this is what has caused the Cardano surge in price as well, because it was thought that Charles Hoskinson will take an important role in that advisory council. Now, we don't know anything at the moment. We don't know if this is going to be created, who's going to be in it. You know, this is according to industry insiders, so we just like take it with a pinch of salt, because it's just like people thinking, telling you what they think. But they mention things like Coinbase, Paradigm, Andrew Horowitz, crypto arm, A16Z. I don't believe that, because that is basically a hedge fund for crypto. And I don't think it should have, it should have advisory powers for, but who knows? Ripple, Kraken, Circle, which is the maker of the USDC, is connected again with Coinbase. So I'm not quite sure. And we'll see in the next 2 or 3 months. So we have to wait until past the end of January, to see the decision that will be taken by the new Trump administration. Because before the 20th of January, it's just speculation. After the 20th of January, then we can start seeing, what in practice they will do. But there is a big, big push now towards this idea of creating a Bitcoin reserve, in the same way as the central bank has a gold reserves, but having some of the reserves in Bitcoin. And this is something that started gaining ground. Not just, obviously, the first example already exists with El Salvador. El Salvador is buying 1 Bitcoin every single day. And did I take let me think. I think I took a screenshot. Let me have a look. I took a screenshot. Where are we? No. No, I didn't. But I can maybe if I can show you very quickly. Just a second. This guy is one of the Bloomberg analysts. So this is a tweet by the president of El Salvador, showing the El Salvador Bitcoin wallet. So you can see now, and consider that El Salvador has got, I think, a GDP of around 24 billion. Okay, so not very big GDP at all. They got like 573 million in Bitcoin, and you can see the total profit as well. So they paid 268 million for it. Is now they made a profit of more than double their money at 305 million. So you can see how how quickly they are gaining an independence from the outside world, because this now starts being really a big chunk of the El Salvador economy. Just think about it, 24 billion. So what's 500 as a percentage of 24 is over 5%. Sorry, 5%. We're around that figure. I can do it for you actually. 24. Ah. Sorry, I'm making a mess. Oh, sorry guys, I'm making a mess. But it's around 4% of the value of the GDP. So you can imagine now having this increase in this value as they're doing every day. Well, soon they will have no need of outside funds, as they now do, from like IMF or from outside investors, and they are really quite quite well on their way to being a really independent state, because the moment that you take money from a multinational organization like the IMF, then you have to do what they say pretty much, because there are conditions attached to your loans. So you can see this is quite interesting from the point of view establishing a reserve. Okay. On other news, so there is talk of a XRP ETF as well, and there have been some filings already for that, but it will probably won't be until the end of next year. But this is WisdomTree, which is one of it's the owner of one of the ETFs already for Bitcoin and Ethereum, has launched an XRP ETP, which is exchange traded product similar to an ETF on several European exchanges. So they have it in Switzerland, Paris, Amsterdam, and what is this, etc. I don't know if it's Sweden or I don't know, but in quite a few. No, Deutsche. It's a Deutsche bourse in Germany, Switzerland, France, and Holland. You can already invest in XRP traded products on the exchanges, on stock exchanges. And this is quite funny, but it's one of the so you see that, and this is funny for me because like only a few years ago, talking about 2021, you couldn't find talk about crypto anywhere in the news. You really had to dig really deep. Now even really big personalities, like this is the CEO of Charles Schwab, which is big company, big trading community behind it as well, that says, I have not bought crypto and now I feel silly. Look at what difference, where up to even a few months ago, people were still saying, yeah, it's too risky, crypto is too risky, whatever, we shouldn't be doing, just look at the traditional investments. Well, obviously now, they can't deny the reality. And so, at the very least, you should consider and have it as part of your portfolio, at the very least. Well, we've done this as well already. A couple more B news, and then we'll take some questions. One thing we're going to be careful of, and as I'm saying, obviously with crypto scams and crypto vulnerabilities, there is one vulnerability now that Apple devices normally are a lot safer compared to Windows devices, but there is a security vulnerability that affects some of the Apple products, like the Apple MacBooks, etc. They have Intel chips in it. So in those cases, please go and look it up online and find out exactly what you need to do. So it doesn't affect the machine with an Apple chip, but it does affect the ones with the Intel CPUs. Okay, so you should update as quickly as possible. There are some updates available that you can upload to stop potentially a virus, and you will acquire these viruses by visiting dodgy websites. Okay, so malicious websites. And this is why I also recommend to everybody the best security you can have is to have a separate computer to access your crypto. Because if you do your browsing and you have maybe a wallet where you have a few tokens here and there, just so that you can use, the different, you can have a look at the different projects that you don't know. Even if you get a virus, it will not affect, most of your crypto or access to your wallets. Because what this vulnerability does, it may allow hackers to actually recreate the cryptographic information that you need to access your wallets. So you could pretty much, even if they're supposed to be, unbreakable almost, it could end up getting access to the wallets and then emptying your wallet without your knowledge. So yeah, I would be careful if you have an Apple computer. And another thing, other thing that's been on everybody's mind is MicroStrategy. So their strategy is basically almost like turned into like a Bitcoin treasury operation. So they keep raising money with different strategies. Sometimes raising money, so giving people a certain fixed rate return. So you can invest and getting like a 5, 6, 7% return, and they take that money to buy Bitcoin because they know that, as a strategy over the long term, they can get a lot more as a result, and then they can just sell part of their Bitcoin, pay off the loan, and they're left with a big chunk in the end. So what is turned into basically MicroStrategy is almost like a Bitcoin leverage Bitcoin investment, and if you've seen the charts on MicroStrategy, apart from yesterday when it was like there was a lot of profit taking, and let me show you. So you can see that, what the price has done simply from September. I'm not even going to go into too far back, but beginning of 2024, this stock was at $43. At the moment, he's about 400. He got yesterday, over the past 2 days, he's gone up from 400 to 540, and now he's dropped back to 400. But it's still obviously in this time frame, Bitcoin has grown what? Let me just put it on. Have a look. So just to give you a comparison, where is 2024? So Bitcoin was at 38,000. So let's round it up. So Bitcoin is trebled in 2024. MicroStrategy in the same time frame is gone up 10 times. So you see how obviously part of it is there's a reason for it, is that there are a lot of traders that don't have access to Bitcoin directly. So they use MicroStrategy to get exposure to Bitcoin and to a leverage play on Bitcoin as well. Now remains to be seen what is going to happen in the future as the ETFs are gaining more and more traction. So some of those funds may be might switch backwards and forwards between ETFs and MicroStrategy. But that's the thing that another tweet that I got earlier is that MicroStrategy is the most traded stock in America. This is a couple of days ago, even more than Tesla and Nvidia. And it's been years since that happened. So there's also double the amount of the SPI, which is the S&P 500 ETF. So just to put things into perspective, and in terms of pricing, and again, remember that we're touching 100,000. This is the difference. What I was telling you before. You can see these structures that before we had in 2014, 2018. It was like a blow off top. Okay. And what instead followed by a bear market, a period of accumulation, and another bull market, and the same thing happened last time. The difference is that this time there was like a accumulation top, which due to the futures positions being built up, and so we didn't have the violent moves that we had in the previous bull cycles. Now, this is possibly, as I said, going to reverse this time because again, there is more trading in the ETFs in the spot market as opposed to futures. So that has taken again the front seat in this process. So that's what what I expect to happen. But from another point of view, if we go back to CoinGlass, one of the stats you can get from here is the funding rate. So how much does it cost? If you click on funding rate, how much does it cost to borrow? To borrow Bitcoin, let's say yearly, so we can get an idea. We don't know, what the figures are, for borrowing dollars, pounds, Australian dollars, whatever it is. So you see how much it costs to borrow Bitcoin and all the other crypto coins on a yearly basis. So these things, although they might look high, 12%, 34% for Ethereum, 20% for Solana, etc., etc. Although it might look high, they are actually quite low from a crypto point of view. And if we look at the heat map, so this is probably more visually easy to understand. So you can see that when it gets to the kind of the yellow and reds, this is when things are overheated. Okay, blues is when they're cooled, when it's really cheap to buy, and in some cases they even pay you to borrow certain items, like this one, for example. At one stage was paying you 130% a year to borrow this token. Okay, and in most cases you can see the greens is where the 13%. You can see that Bitcoin has been quite. It gets to the point sometimes when it gets more expensive is when the market is getting overheated and when normally it's followed by a correction. At the moment, where we are here, it's still fairly cool. Okay, so there's nothing to indicate that although we are hitting a new high, $100,000 seems like a lot. It doesn't even kind of like almost like it's taking it in its stride for the whole crypto market. So I wouldn't worry at this time. And there might be a pushback from the $100,000 level, but from what we can see, there is no specific reason why we should have a very deep pullback right now, because it's still. So at the moment, why are these important? Because if you were to buy Bitcoin, obviously it costs a lot of money. All right, but if you can instead get the advantage of the price for any of these cryptos, it doesn't have to be Bitcoin, for any of those. If you can get the price increase but borrowing somebody else's money, then obviously that is there is lots of traders that they do that on a daily basis. So when that becomes very expensive, so if Bitcoins, like in some cases, it's cost over 100% a year to borrow Bitcoin, so that means that to make a profit over 1 year, you have to make more than 100%. So you have to make more than double, your initial investment to simply break even. Obviously, you can see how that is, that is difficult to achieve. And then, why when these funding rates get very high, then there is a pullback, because sometimes if prices are stalling, they're not moving, it costs traders every day to maintain a position if they borrow money. Okay, so at a certain point when I think, well, actually, you know what, things are not going, and just get out of this, and then I get into it later once it cools down. Okay, so I'm saying at the moment, prices seem to accelerated, but nothing to worry about. I think in terms of having reached a top. Okay, let me see. Have you guys got anything ready? Sorry, Ray, you are. So if this, no, this is the last time. Okay. Okay, the link has already been shared, so you can click if you want to see the article with the vulnerabilities of the Apple computer. You can click on the link. Okay, any questions, guys? We got about 10 minutes to go. As if there are no questions, I'm just going to close the call early. Okay, while you think about it, I just want to tell you about next week. I am busy on Friday, so there is not going to be a crypto hour. For those of you that are part of AAW, again, I will not do the long-term wealth session on Friday morning. I just have to discuss it with Paulina and CLC. Maybe I'll do it in the Thursday evening instead. But so keep an eye on the calendar, but definitely it's not going to be a session next Friday. And I might have to, by the way, I might have to cancel the Friday appointment if there are any booked. I might have to reschedule the Friday appointments too. Okay. Any questions now on? Oh yes, Pierre was asking, will Trump do a similar thing as Bukele? I mean, that's the idea. This is what people think. We need to wait until January, until he comes into power, to see if this is reality or not. But it's not going to happen on day one. They're going to have, first of all, to establish a council to oversee this, and then we're going to have to, start making a decision and then start, investing. So it's something probably, if they do it, it will, at the very least, the very earliest, we're looking towards the middle of next year. And it could be actually create a nice new top, for Bitcoin, which is might be when the prices start declining after they start buying big chunk of Bitcoin, and then people thinking, thank you very much, we'll take it, and then we'll move on. Who knows? Yeah, but the idea is to establish a Bitcoin reserve, and I don't think that Trump is the only one thinking about it, although not publicized. I think many other central banks are talking about using cryptocurrency, and Bitcoin in this case, as part of their reserves. Okay, and it can be. So when you think about reserves, and not just gold, many central banks have a number of currencies in reserve into the central bank. So the main reserve currency across central banks is the US dollar. Think about it. What we could see could be some of that, some of those US dollars repurposed into Bitcoin. Who knows? But it's it's a lot. Ray, would you still recommend taking some profits at specific levels? That depends. So I can't answer that question, obviously, first of all, because I can't give financial advice at the moment, but it really depends on your individual circumstances and what you're trying to do. What crypto means to you in your investment portfolio is different from each one of us. So I'm thinking, so the way I can put it for you is that before you make any investment, you should define, first of all, why you're doing it, what the plan is. So what the plan is for entry, management, and exit. And as long as you know that your plan is according to what you are trying to achieve overall, that's fine. You shouldn't let the the market just sway in your plan, because your plan is based on your individual circumstances. So whenever the circumstances are right for you, to take profits, then do. You can always see it's always possible. Then even if you take profits, you can always reinvest. If your plan allows you to, and take some more positions. Look, will you be basing your profit taking based on the inverted gold chart? Not necessarily, no. but it is one of the things, one of the indicators that I'm looking at. Because there is, the thing, it's, you got to see as well what the relationship is between, gold and Bitcoin and the US dollar, because you might see that, for example, Bitcoin decreases in terms of value in gold, but if gold is shooting up, that's normally going to happen, but it will still, Bitcoin will still go up, but maybe not as much as gold. So why would you take profits in US dollars if that hasn't stopped, that relationship hasn't stopped growing? So but definitely we'll see that. Do you expect much shallower pullbacks to continue and potentially a shallower crypto winter now there are ETFs? We are in new territory here, completely new territory. I expect the peak to be very similar to the one of 2021 in terms of percentage, because of this, not, how can I say, this asset rotation. So a lot of assets being moved into Bitcoin first, and then other crypto projects as well. But the crypto winter as such, it really, because first of all, we were looking just as investors. It was only based on crypto metrics. Okay, so we only based those decisions before on how many Bitcoins were in circulation and the relationship between demand for Bitcoin and how many new Bitcoin will come into the market. Now, I think a lot of what's going to happen in the next 2, 3, 4, 5 years will depend on how much do we use these coins, these tokens in our daily life. Because it's not so much just a game, like a trading game of buy something that's going up, that's rising, and then run away when things starts going south. If we have tokens that are used on a daily basis that you need for your life, then it's just like a company. How many new users can you attract? How much are they using your product, and so on. So this is where I pay more attention to the projects that are making an effort in attracting like real world users, let's put it that way, to their blockchains, because I think this is where the utility will really come into play. And we don't know what's going to happen at the moment. What we can see is that we are pretty much like following the previous patterns. If we have to look at what happened in the past, then we are looking forward to pretty much another 12 months or so of growth, and then we should go into a bear market. But we'll need to keep an eye on what happens post boom. Let's put it that way. Okay, and that we haven't got to that place yet, so it remains to be seen. But I'm not quite sure about how deep any pullbacks will be. There will be some sharp pullbacks as well, like we saw in MicroStrategy yesterday. There will be some 30-40% drops. I think I'm kind of like expecting in a way, because it's still a very volatile asset. So if something bad happens, like the economy starts turning into a recession or something like this, how quickly would people move their investments away? I don't know so far. But in any of the previous bull markets, we've seen some fairly deep pullbacks of over 30%. So it's kind of like you will do well to expect some of these and not get surprised if we get the same this time. Okay, all right, guys. So I will end the call now. So I remind you, the next crypto hour is going to be in 2 weeks' time. So have a fantastic weekend, and I will see you all in a couple of weeks. Hopefully, we're going to be in a like pre-Christmas mood. So it's not time for the red hats yet. It's got another week, I think, after that. But hopefully there will be a lot to discuss in 2 weeks in crypto. Okay. All right. See you all. And Jonathan, if you got five, oh no, actually I can't talk to you because I got a meeting. But anyway, I'll need to discuss something with you. We can connect at a later date. All right. Goodbye, everyone. Have a fantastic